Hi there. Welcome to the Best Minds in Real Estate interviews with key players in real estate. Today we have Adrian Foley, who is with Brookfield Properties, Brookfield Development nowadays, right?
That's right.
Adrian, maybe welcome. Good to have you with us. How
Thank
are you
you.
today?
Gadi, thank you, Gadi. I'm good. How are you?
I'm well, thank you.
You look
I see that-
fantastic.
Thank you. So do you. I like the formal attire, just for me. Very nice. I really
No.
appreciate that. Oh, it's not about me. That's too much. So I see you're in the office. So are you in violation of any state or company rules, or is that permissible?
No, it's permissible. So we are an essential service, as I think you know,
Right.
predominantly on the land and housing side of our development portfolio, but also on the multifamily side for any of the products that we're building that are affordable. So we have a series of developments there. But so I'm in the office for two reasons. One is I'm allowed to. We're allowed to, for those of us that struggle to work remotely. I'm one of those candidates, and I love where I live, and I love the environment that I live in, and I love my family dearly, but productive work in my house is really challenging. So I choose to come in the office. We have about 40,000 feet here and about 15 team members right now in this office. So I'm suitably socially distanced from anyone, and I have my mask that if I do need to walk around the office that I'll wear. So, but that's why I'm here. So
I'm glad to hear that, and good for you. For those who don't know what you do and what you're responsible for, would you take a moment to kind of describe what in Brookfield do you oversee?
yes, I would. I'm happy to. So I think of it as sort of two businesses that have an overlap. So I've been at Brookfield for 25 years, actually my 25th year this year, and I've always been predominantly on the land and housing side of the business. Brookfield has, through Brookfield Residential is the flag we fly, through Brookfield Residential, a land development and for sale home building business. And over the last 2 to 2.5 years, we've sort of morphed that development business to support a couple of other businesses that we either one acquired or two merged with. Oliver Macmillan, a company in San Diego, and Forest City more recently in the last 12 months, actually probably the last 18 months, excuse me. So two businesses over the last 2 to 2.5 years that we have pulled into our development portfolio, such that when Brookfield looks outside of New York and DC and Boston and wants to develop really any real estate, go vertical, go horizontal, go vertical on any real estate that either it owns or it wants to acquire and develop, it looks to a development team that is about 1,500 team members that I'm a part of. And so we think of it as those two hands. I use this in any of the discussions I have, pulling closer together. And I know you know through your personal, through yours and mine's personal exchanges, you know how that journey has been. So we're a couple of years into that process of pulling those companies together, and they now operate as one business, Brookfield Properties Development, small d development. So when Brookfield looks to develop its real estate, it looks to a group that I'm a part of.
So before COVID-19, what was your book of business like? What were you working on as far as the overall company portfolio?
Yeah, so we on the land and housing side, we projected 3,000 to 4,000 homes a year, 3,000 to 4,000 lots a year. On the mixed use side of the business, we had roughly $3 billion of construction underway in various mixed use developments, 9 mixed use developments, some of which were horizontal developments to go vertical. Pier 70 would be a good example of that. And others were developments that were in the ground coming into January 1 that we were moving forward. And we had planned to start an additional 6/7 other mixed use developments on top of that. So we had a let's just say, a really robust business plan, full of optimism. Just, I mean, the last 2 years have been challenging to pull those groups together from the mixed use perspective, and it was just beginning to click. And I'm not saying that to sort of set this up for some other, for some dislocation, but it was really just getting to be in a really strong operating mode. We had things to work out, but generally speaking, it was teed up perfectly Jan 1.
So March was the big slowdown month or the transition month. What does the company look like today off that pipeline? How much of that are you still moving forward with, and what you're not moving forward with? What are you doing?
Yeah, so on the land and housing side, a couple of statistics. The first, I think of life as sort of pausing or slowing down from the middle of March onwards. So when I think about this over a 12-week period, March 1 to 5/26, it sort of breaks down into like 3 weeks of euphoria, still carrying over from February, and really strong land and housing sales. We were, I'm gonna get it wrong, but we were 25% above our plan for the first 8 weeks of the year. Really strong demand, really, and we think about sales as the end of the funnel. Like the start of the funnel, demand was really strong. Traffic was great, interest was really strong. So those first 3 weeks from land and housing perspective, we had generated sort of 0.8 of a sale per week per community. We had traffic that was in the 20 to 25 range on a per store basis. And then I think about that middle period as those 5 weeks of, I'll call it, significant pause, or
That's from like early April to mid-May.
probably the third week in March, fourth week in March to the end of May.
Okay.
So sorry, to the end of April, excuse me. Yeah, that 5-week period of really comparative nothing, like literally stopped. We went from 235 sales in 3 weeks to 84 sales in 5 weeks. And traffic just plummeted, just dropped off the face of the earth on the land and housing side. Went from 5 people per week, really miserable environment. So operationally, what we did was we immediately applied the brakes to the business as best we could on the land and housing side, and said, okay, let's gather around the virtual meeting environment on a weekly basis, and let's dive deep into our information and our business and how we're running it, and just basically, if nothing else, just to get alignment across the various parts of the business across North America. We had some markets that were more positive and some more negative, but we wanted to try to get everybody level set. So we had other groups listen in on other operating businesses' performance. Cut a long story short, the last 4 weeks we've gone from 84 sales to 151 sales. So we've rebounded. Our traffic's improved dramatically, mainly as a result of an increase in virtual traffic. So we'll get to that separately. But just the general environment has lifted and become more positive. So we've really seen a strongish V in this last sort of 4-week period. So I think of that on the land and housing side as sort of survival round 1, if you like. On the mixed use side of the business, so a lot of these 9 developments are, this way better than I do because your knowledge and experience. They're in the ground, they're working through, they're almost agnostic to an economic situation. They either need to stop or they just need to get done. So we're in various stages. We've evaluated for each of the 9 any that we could pause where it made sense to pause. In other words, where we hadn't committed GMPs, or we hadn't had financing, or we didn't have an obligation to deliver a building or a structure to a tenant. We paused, and we're just going to wait it out. So a couple of markets were in San Francisco. We just said, rather than go vertical in the next 3 months, 4 months, 5 months, we'll just wait. Others where we're in construction, we've kept going. And in the case of our Nashville development, which we had looked to grand open sort of around the end of the third quarter, we've sort of pushed everything out until the first quarter next year. and in most situations, listen to the tenants that were the businesses that were going to be opening on the back of some of those developments coming to fruition, and just listen to them and said, what's the best that we can do right now for you? A little bit obviously feedback and back and forth, but generally speaking, we're taking the view that Q2 is going to be very much a stalling period for us across the land and housing side and the mixed use side. We'll wait and see what July and there beyond delivers.
So what are you watching what are you reading? Who are you talking to? What are you watching to help inform that unpausing or the continue versus slow down sort of decision?
So the beauty of Brookfield is I get a bit of a window through my colleagues in other businesses, my partners in other business, our partners in other businesses. So I get to listen to the retail. So first of all, Brookfield has a global call, Gadi, every Thursday morning, where as a result of this pandemic, Bill Powell, Brian Kingston pulled together sort of the senior partners, senior business operators in the business across the globe. So I listen intensely to what those in other parts of the world, China, Seoul, Korea, are telling us about how they've reacted. And then I listen as we come around the businesses to the operating segments, retail, office, hospitality, how they're turning, how their pages are turning in their business. So that's the first sort of level of information. The second is we have a really great window into our customer today who's living in housing, whether it's multifamily housing or for sale housing. We have a window into buyers coming in the door wanting to buy a home. We have a window into those buyers who are in escrow, and we're having conversations with them about when they're going to close. And on the leasing side and multifamily side, I'm hearing from Matt Smith, who's our partner on the multifamily side, how the customers who are living in those 60-odd thousand multifamily properties that Brookfield manages, how those homeowners, home dwellers are bearing up. So I get a kind of a cross section of views. If I just had for sale housing to listen to, I think my prognosis would be way rosier than our current sense is, because I think that's maybe one part of our business portfolio that's been the least affected. And there's others, technology and logistics. You would argue our logistics business is the least affected, but really for sale housing. And I think you and I had this exchange on one of your chats that we are very, generally speaking, the land and housing business has been somewhat left alone. We've literally we've had very few days missing. We've extended some schedules on our land and housing business because people can't double up on trades. But as an ordinary course of business, we basically have stayed business as usual. So that's how I get some perspective. I listen to people like you intensely, and I'm not just saying that. I listen to, the economic forecasters in our real estate space. I listen passionately to podcasts. I read Twitter incessantly for articles about real estate that I can glean information. I steer clear of some of the news media that's out there. Candidly, I'm just getting numb to the commentary that's going on. But we all sort of soak that up as sort of individuals in the group and share sort of prognosis. We sort of have a bit of a view at Brookfield. It's a bit of a Brookfieldism that it's never too rosy nor too gloomy. You're never too good or too bad. So the practice that we have tried to preach is that for every two optimists, there needs to be a pessimist. And it's not quite that ratio.
But you still want to have two optimists for everyone.
You still want to have two optimists, right? Otherwise, why would we be in this business?
Right?
So, but I think it's really important in any conversation, in any healthy discussion. There used to be a saying on one of our wars. It was like, if all in the room are thinking alike, no one's really thinking. There has to be a tension triangle in viewpoint. Somebody's got to take the view of the pessimist or the optimist.
So over the next 6 months, between now and the end of the year, more or less, is it your point of view that at least as far as the shelter business in America is concerned, that we're past the worst, which is what the stock market is suggesting, right? Or do you expect there will be another substantial disruption between now and the year and the end of the year?
Obviously it's a really difficult question to answer. I agree with you. The stock market seems to have a fairly formed opinion of that today. As a company, we are not of that view. We think we still have some ways to go before we can formulate that view accurately. We think we've got a significant amount of disruption, and with any significant amount of disruption becomes a very unpredictable path out. So as it relates to shelter today, I think we have a ways to go before we can say whether we've seen the worst. I didn't mention pricing, by the way, or even on the multifamily side, list leasing. We've seen very little. We've seen next to no price erosion on the for sale housing side. And I mean, in the US, like maybe less than 2%. In Canada, in Alberta, maybe a little higher just because of oil and the impact of oil in the Alberta market. But frankly, across the business, our backlog has come through really relatively unscathed. Maybe 5% of our backlog has not showed up. So, and on the multifamily side, the team there are telling us that leasing volumes, albeit suppressed down, they're not, they maybe have teased in some additional months here or there where they've needed to, but generally speaking, it's been relatively positive. So I don't think we've seen the worst of that at all. I think we've got a bit of a wave of backlog in our industry that has to close. We've got a bit of a wave of spec inventory that has to work through. This is just on land and housing. Right. Multifamily, you and I have a view on that. And I think until we see those two volumes play out, I don't think we'll have seen the worst of this. We've got 40 odd million people probably by the end of this week to put back to work. I don't think you can accurately forecast the time frame for that to occur. That has to have an effect. I don't care if it's 90% people earning 40,000 or not, or less or not. And I don't think that's the number. I think it's skewed actually more balanced towards the middle. That has to have an effect on shelter. So, look, plenty of opinions out there. I'm more inclined to ask you that question than I am to ask myself. But our view is that we need to remain appropriately cautious. And that pessimist in the room probably has a slightly louder voice today than the two optimists.
Right. So given that point of view, I don't suspect that Brookfield is a seller by necessity. You sell when you're good and ready to sell, but you are very well capitalized, so you are a buyer. So are you selling anything? Are you unloading any assets? And on the other side of this thing, are you looking to buy, and are you successful in finding things to buy now?
Yeah, so there's a bit of another Brookfieldism is, for every day that you didn't sell, you were a buyer. Right. So not that we're in the day trading business as a real estate firm, because we're not, but you've got to have that kind of discipline. Otherwise, you can lull yourself into some bad decisions. So as a general rule, I would say on the land and housing side, we think it's way too volatile today to be a seller or a buyer. If somebody comes in today and offers us something, we've had offers for land in the last 12 weeks that we've said, no, we're not interested in selling. We don't need to your point. Conversely, we're being very cautious about anything we look at as an acquisition. We are thinking about how we assemble an approach for the future for those opportunities, because we do believe there'll be some dislocation in the market, and therefore we want to make sure we're set up for that. So the land and housing side is predominantly acquisitions, dispositions are pencils down. There are some lot sales going through the process. I mentioned we do 3,000 lots a year. We've significantly cut that back, but we'll still push forward with lot sales.
Before you move into multifamily and
Yes.
mixed use, in the for sale housing and the land and housing business, what is the bid-ask gap? And you're in a very funny place, right? On the one hand, you're a seller, but so that's your ask, and you're not finding bids for it. On the other hand, you're a buyer, and you're not finding bids or you're not finding asks for your bids. Where do you think values truly are? What is it's not just what dollar amount or percent from last, but how do you figure what a piece of land is worth in May of 2020?
Yeah, I think you have to look at what your prognosis is of when, quote, reasonable market conditions return. So if it's, if that's behind us, you may be thinking about that if I bought something today, I could open it in, 6 months and I could have a normal selling environment. Now, you may say that normal selling environment is down 10 from today's selling environment, and therefore you're pricing it accordingly. But whatever your assumptions are for that, quote, return to normal or return to normal operating business is probably what's in your underwriting. We just don't think today that's a conversation we want to have, candidly. Now, we do have it every day with builders who buy lots from us. So, as I've mentioned, as a general rule, they went through their 5-week period there that was miserable and nobody wanted to do anything. But candidly, in the last 4 weeks, we're starting to see a bit of a trend get formed. It's way too early to draw a line on a curve, but it is definitely the beginning of a foundation. I think we had a lot of pent-up demand, post that February, end of February date, that quite honestly, independently of the pandemic pressure on being able to access or view or buy a home, that stayed because people needed to move, whatever their need was. I think the bigger question for me and us is how do we think about that real demand that has to come through that is replacing those people that were still waiting at the end of February. So we're having these conversations with our builders, and candidly, they're generally speaking compliant with our request, which is that, look, we won't do anything for 60 or 90 days. Let's have a conversation, towards the end of May, start of June. But the market is showing that it's receptive to an absorption. Hence, we're going to ask them, to step up and commit on their contracts. So, but I sense your question to be more of that, macro, acquisition disposition environment. We're certainly not saying we think there's a cliff edge out there and we should shove everything into the middle of our land and housing, table and get people to come buy it from us at whatever it is on the dollar. We don't think that. Conversely, we're not out there today saying we've seen a dip in real estate prices, we should go buy everything. We frankly haven't seen that dip as I was mentioning. So it's very difficult unless there's somebody who's significantly dislocated themselves. They've gotten themselves hurt, in which case we're happy to help them out. But we haven't seen that many people do that just yet in the near term.
Yeah, we don't see a lot of dislocation either yet. At least we're not seeing a lot of distressed offerings. And there seems to be a bid-ask price. When you ask the sellers, they're sort of would be willing to talk at 10% below what they thought the value was in February. But when you talk to buyers, they're really looking at more like 70 or 80% of what it was back in February. But there hasn't been enough in the middle for the parties to meet one another. And I'm not even sure that the buyers really would buy even 80% on 80 cents on the dollar. But time will tell. In the meantime, what we hear is that the can is getting kicked down the road. People are saying, let's have the conversation in 30, 60, 90 days. Kind of like what you said.
Yeah.
How is it different, if any, in the multifamily and in the mixed-use business?
I think of the commercial development business and predominantly multifamily for us, because that's been our anchor, as a little different. I think of that being a lot of public-private partnership discussions. So to the extent those weren't producing results in the past, I think those could definitely come back in the near term. Cities are looking hard at their revenues and their expenses, and rightly so, reaching out to try and find development partners to take on some of their needed development opportunities. I also think that certainly as it relates to our own retail business, we've seen. I didn't mention that in that portfolio that I was giving you at the start, but we were working at the time on 10 retail assets that we were taking through entitlement, and we have subsequent to that identified another 20 retail opportunities. So as I think about that as a opportunity space, we think that.
And I think what you mean is redeveloping or repurposing malls.
Correct.
Yeah.
Correct. So if anything, that has gotten better, depending upon who you are. If you're the owner of the real estate, there's some challenges. No disrespect.
Better for
better if you're partnering up with those individuals, but they're our teammates too. So what we've realized is that some of the friction that we had around some of those entitlements, whether it was a tenant, an owner of real estate, a big box owner, or a city, that all of a sudden those conversations are at a whole different level, which is good. So as a result of that, we think there may be some opportunities that come to bear in that part of the business. And then there's this whole view which hasn't really played out. Obviously hasn't played out, but there's some subjectivity as to where urban sits in the future landscape, and if X% of your business can work remotely, does the urban environment still have as much appeal as the suburban environment? So our view is we've got to be prudent observers of dislocation and value in those locations too, which we actually think we'll see some great opportunities there as well.
So let's go back to what you have done to cope with the conditions on the ground, and how is that setting you up into the future? What are you doing differently now? What different things are you doing today that you weren't doing 3-4 months ago?
Yeah, so I think about it in terms of, or we think about it in terms of both operationally, relationships with our kind of customers, if you like, whoever that customer base is, and then sort of a future thinking about how we might evolve. So one, operationally, I think you know this, Gadi, because we've had this conversation before. We were a very virtual environment within the development group. We realized the strength of, at the time, Skype. Unfortunately, we transitioned from Skype because it's gone through a bit of a bumpy spell. But we were actually Link users way back in the day, right, and video screens in conference rooms and cameras on every desktop. So we really saw the phenomenal value of that. This pandemic has multiplied that, and candidly brought some things to bear for us that we're challenging ourselves on, which is, time spent traveling, time spent, meeting face to face as opposed to virtually, and good discipline around good meetings. So operationally, we've made a huge shift as it relates to our operational business. As it relates to speaking to our customers, so when I think about our customers, I think about homeowners, or in the case of multifamily, our multifamily partners, home renters, but also any tenants that occupy any of our buildings. So we have initiated I'll call it a year-end push to really re-engineer our whole selling proposition online. We're already a digital company, and you can go on look at our websites and look at our website, and look at our homes digitally and get really good data and information on what that home looks like, what it's going to feel like for you to live in, and any of the touring abilities. You want to tour it, we'll tour it for you. You don't have to get off, leave your home. And then we transition to this what we call unmanned sales environment, or unattended access, as we like to refer it to. So you can go visit, Gadi, you and your wife can go visit our model homes, 7 in the morning, 9 at night, at your leisure. That's going to be old school. That will be just accepted, we think, as an industry norm. But what we think we need to do is now up that game and allow you to really get comfortable with the information we're providing to you on the price of the home that you're buying, so that you don't feel like, I'll say it another way, you have complete transparency as to what that home price is relative to other homes within the neighborhood, other homes within the region. Think of it as the sort of progressive insurance, Price is Right test. And we do that internally with every one of our homes. We're obviously, benchmarking against our competition, the resale market, but also homes we've sold. Why can't we provide that to our customers? We've got to be careful. We've got to make sure we're not scaring people away. But we think we can do a really good job of transforming this relationship online, such that you don't need a third-party advocate, in parentheses, broker, to validate that transaction. We think Zillow has done a phenomenal job of really lifting the veil up of mystery around how homes are priced, and frankly, the uniqueness of each home is maybe even more relevant in the resale market. In the new home business, it's less, frankly. We have base price, premium, options. Those are the three categories. So we think we need to transform that. So that's the second piece for the customer. On the multifamily side, I think Matt Smith, our partner in multifamily, would tell you that they are going to be doing the same, looking at really lifting the veil off of the leasing process, such that you don't have to. Really, it's very difficult to lease a home today. I did it with my son, and I was embarrassed. I was like, it's so flipping difficult to even get in these apartments. And I get security, and I get, but we've got to make it easier as an industry for our customers to view, our customers to get informed, and our customers to commit. So we think that's a huge part of this process.
So I hear a lot of moving to things that are more touchless, contactless, and more self-guided, with you providing information and options and the customer driving their own experience.
Yes, because we think the customer doesn't realize they're paying for that.
Yeah.
They're paying for that lack of transparency, that lack of, we're not paying for it. The theory is I could give 4 or 5% back to the customer and be at the same net number if we were to re-engineer the process. It's a huge amount of money.
So some of this stuff is accelerating trends that were happening anyways, and accelerating initiatives that you were working on anyway, right?
Correct.
So if you fast forward 2 or 3 years, COVID-19 is now in the rearview mirror. We found a way to deal with it, or we eradicated it, whichever it is. What does the new normal look like? What is going to be different in your 3 lines of business from today, in your opinion?
So I think of it on the land side. Our land model, by its very nature, has got to get re-engineered. It's a really terrible, and I'm macroing here, but it's a really terrible model. We need to build way more segments to justify the investment in capital on the land side. So with that, we've got to bring much more of the for rent side of the business into our master plan communities. On the for sale side, we've got to build a relationship with that customer that goes for the next 50 years, not for the next 5 months, and provide all of the, I'll say, advocate services that you would expect from somebody who is providing you with probably the largest purchase in your life. We get more service from a car company that gives us a car every 5 to 6 years than we do a builder that's building the one-time largest purchase. So that means buying houses back. That means buying houses back to rebuy another one, certifying houses. That means having an iBuyer program, independently of whether you bought a Brookfield home or not. We'll still take your home in trade-in. It just means being a shelter partner, and that's a really bad word, but we've got to find a sexier way of explaining that to that home owner. Same on the rental side. So if we can suite those offerings together, provide the vertical segmentation that supports those offerings, from single-family rental to multifamily apartments to short-term stays to corporate housing. To there is an ecosystem of shelter out there for our commercial tenants, for our home leasing renters, and for our homeowners that we can do differently.
So I hear two really interesting ideas here. One is sort of a customer for life. No matter how you get into our system, we're going to try to be your provider for your housing needs for as long as you let us.
That's right.
And the other one is a massive effort to integrate all of your business lines so they all deliver the customer for life seamlessly without allowing the silos, multifamily versus single family for rent versus single family for sale versus.
And God is just frozen at the most opportune time.
Land to each do it for about 5 or 10 seconds. Am I back?
You are
okay,
back.
I should be back now. Thank you. Yep. So I was just saying that there's two major ideas here, and the last one was the idea of not allowing the silos get in the way of this idea of serving customers from end to end. And I agree with the observation that when you think about particularly the home buying experience or the home ownership experience, the relationship with the provider is so limited, and it only comes to light now when you think about the single family rental business, where you have companies like Invitation Homes and perhaps soon Brookfield, who are building and servicing homes for people to live in. Yet we build and sell a home, which is a much bigger transaction, and walk away from it. That makes no sense.
Makes no sense.
Right.
It's absurd.
Well,
and I'm not sure, Gadi, that there isn't somewhere between, and I know you and I have had this conversation, somewhere between 12 months and 30 years as an, quote, ownership proposition or a living proposition. So we're not quite sure what that is today, and maybe, I'm not sure 2 to 3 years is the right horizon time frame, but it's probably, hopefully, not that far away for us to re-engineer some of those two statements. That would be really exciting.
It'll be very interesting to see also the intersection between that and the financial services side and the economics, because, car companies have gone through this transition, right? You can buy a car, you can lease a car, you can trade a car in, and you can trade into a lease, trade into an ownership, and whatnot. But when you are, the loyalty of the customer isn't necessarily a lifelong relationship. So they'd like it to be, but it doesn't really work that way. The question is, with a real estate company, how much mobility is there in America, and can you service that consumer wherever they go, even if they wanted to be serviced by you? Mercedes can service you any place. Can Brookfield?
I think we have to engineer that solution. I think it's possible. Look, we don't have to own every person that services that relationship, but we can certainly partner with those that can provide that service. And I think that's the point. And the dollars we're talking are significant. The issue is that every one of those segments, there's a layer and layer and layer of cost that's built into those segments. So the expectation is, as we start to remove the layers, the cost will compress. So the customer should be the recipient of that benefit.
It should be to everybody's benefit. It should be a win-win, because you will have no economic interest in providing something at a loss, and they will have no interest in paying more to get the same or less.
Right.
So we have to negotiate the differences. So it'll be interesting, and I think that you are uniquely positioned to do this because, as a big company and a public company, but a interestingly structured public company, you're not as susceptible to the kind of challenges that a conventional home builder, or for that matter, a multifamily REIT would have in adding on a business model to the business model to the overall platform that is in conflict with or not consistent with what they have done historically. So when you buy land, build homes, sell homes, and that's how you make money, to try to convince somebody to change their expectations may be more challenging than the flexibility Brookfield has within its umbrella. So
that's right.
We will stand by to to learn about how things develop for you. So we could go on forever, but I think maybe we should call it a day and maybe regroup in a few weeks and catch up on what changed and maybe explore some more of these ideas. But before we part, I'm curious about your personal experience. What in the last month or two has surprised you?
So I have to couch my comments with, I grew up in the UK and
With a Texas accent.
no, I wish it was. That's far more attractive. So I grew up in the UK and went through the worst flu seasons on the planet, frankly built a pretty big resilience. You build that immune system that comes with living in those environments. So on the one hand, go back 12 weeks, I'm surprised at where this has gone, because I wouldn't have had, I wouldn't have had any sense that despite all the warnings that this is where it would have gone. So with that,
it ended up being worse than you thought it was going to be.
Way worse than I thought it was going to be. So that's probably no big surprise, but I couch it just because I come from that right. environment where it's another flu season. So how I think about it as a surprise to our business is one, the kind of home buyer resiliency that we've seen on the land and housing side, and how really they stayed focused on the horizon, really quite amazingly. So that need was great, and whatever that need was, it didn't get interrupted by the fear of whatever this would do to themselves. They're living in their current environment, working remotely, dealing with all the stresses that I'm sure their businesses, their companies, are going through, and their families are going through, but yet they stayed focused on the horizon. So I'm really surprised at that. Two, I'm surprised at the last 4 weeks activity, because I think if I were pinned down 4 weeks ago and said, how do you see the next month? I'd have said flat to declining. So, however, optimism has reigned, and consumers have begun coming back. Now, I do think it's a bit of an Indian summer. I do think we aren't really seeing a quote normal environment, but that's been a surprise, and I'm surprised obviously to the positive. The third would be, I think I'm surprised at how quickly some companies have gotten into financial distress as a result of this. And maybe I shouldn't be as surprised at that, but there's some pretty early exits being called by. I mean, granted, a lot of the retailers we're speaking about, but other companies too. You mentioned car hire companies. Hertz. So companies that clearly got themselves into a financial predicament that this tripped them over, and now they'll get maybe reorganized, and maybe that will be their best route out. But I've been surprised at that.
Yeah. Adrian, what do you think we'll be talking about over the 4th of July weekend?
I think we'll be talking about, so my optimistic eye says how positive June was for us health-wise. That's really what's most important. Economy-wise, how people really started to re-engage and get back to quote closer to normal. And housing-wise, shelter-wise, how we sustained May's performance and jumped on it in June. I think on the reflective side, we'll be counting the cost of this candidly with a little more accuracy, and maybe just a little caution how much it'll cost us how much it'll create for us to repay. So what will we need to do to repay it? So look, I hope more than anything that you and I sitting there with a beer in our hands or a glass of wine or whatever our choice is, and toasting this wonderful country, because it is a phenomenal place to live and be. And I know that's going to be the case, but I'm hoping it comes with with consistently improving economic conditions as well.
Well, I hope so too. If the history is any indication of the future, which it usually is not, and ultimately will prove not to be, but at least so far in American history, we don't pay down debt. We simply grow our economy, so that debt is small in proportion to the overall economy. So hopefully we can resume growing the economy and hide this debt and not have to deal with a consequence of actually needing to pay it back. On a personal note, what are you most looking forward to be able to do that you aren't able to do right now?
So I got back to play golf about 5 weeks ago. So that was my first look forward to. So I'm glad to be doing that. I have a bit of a habitual exercise routine in my local gym that I haven't been back to, and I live in a town just south of here that has got a lot of hills in it. So I do not like running those hills. So I'm looking forward to getting back to a treadmill. I don't have a treadmill at home. Maybe I should just buy one.
Exactly. Consider that.
And then thirdly, so we have some favorite restaurants in Laguna Beach, and I'm really looking forward to good Italian food in our favorite Italian restaurant. So that's what I'm really looking forward to.
What's the next sporting event or cultural event you'd like to go to?
Oh gosh, that is a great question. So I'm hopeful that the Premier League gets back on June 15th, I think it is, there or thereabouts, and I hope to see one of my favorite teams, Liverpool, win the championship. So I don't care if there's nobody in the stadium. They just need to win 3 games and I'll be happy. I hope to actually go to a concert. I don't think it'll be for a while, but I hope to go listen to live music. It's been really interesting. We studied a lot over this last sort of 2 years here as we pulled these groups together about, this activation, placemaking, why people enjoy certain places more than they do others. And candidly, at the root of it all, it's because there's people there and there's energy there and they get a great vibe off of that. So I'm really looking forward to it. I don't care if it's a concert. I don't care if it's a sporting event or whatever it is, but I'm just looking forward to getting back to people in a safe, obviously, but a safe, energy-filled environment.
Yep. Food and music. I love it.
It's a great combination.
Adrian, have a wonderful summer, and I look forward to catching up with you real soon.
You too, Gadi. Thanks so much. Really
You
appreciate it.
Take
See you
care.
soon. Bye.